Нету ни берега, ни дна. И разошелся, как письмо в воде. Солнце сквозь облака, как вина. Что осталось горькой на чьем-то столе. Я не зову некого звать. Тени молчат в телефоне без звука. Все, что осталось, я стал забывать. Кроме твоей одинокой разлуки. Ты
All right, guys, what is going on? What is Gucci gang, dude? Are you guys ready to learn something today? If you're ready to learn something, drop a 1 in the chat. I thought I'd be able to finish my lunch before we started, and I mistimed it. So I was hoping I could finish it. I only got a few more nuggets left. But you guys are here to learn, so I will also give you some nuggets. So see, I've got nuggets, chat. Look at that. See that? Oh yeah. I got some nuggets, baby. Nuggets for me. Nuggets for you. So hopefully you guys are excited about that. I would hope so. Did you guys bring a pen and paper today? That's funny, Mason. Nuggets for breakfast. It is noon, my friend. It is noon. And did I ask for your judgment, capitalist? Did I ask for you to judge me? No, I did not. I've had pizza for breakfast. I've had nuggets for breakfast. I've had warm beer for breakfast. So it's been like a decade since I've done the warm beer thing. But listen, if I want to know, I'll ask, baby. If I want to know, I'll ask. All right. What's good? Robert, Sean, MJ, Mason, Eric, Capitalist, Patch, Mark, Ebernith, Tordy, 2020, Marshall, Eric Scott, H. Who else, man? Oh, we don't have a lot of people on today. Did a lot of people take L's today, or what's going on? And not on my Instagram story. We posted a lot of dubskis in the chat today. We posted a lot of W's today, baby. I never talk about currency. But then when I do, that bitch smacks. Right. This is funny. My friend was asking me about currency the other day. He's like, John, he's like, I see why you like indices so much now. You know, they're so clean, all this shit. I'm like, yeah, bro. Currencies just are trash. They're not untradeable. They're just slow. You need a lot of leverage. It's just not good. It's not good. Yeah, hell, even like the micros are, to me, are better than currencies. Like the micros for index futures is what I mean by that. Was good, AJ? He said touche, me too, yeah. Cold pizza is always a good breakfast. Follow for more nutritional value content. I want to talk about AUD USD before we go over into currencies. Now, this is going to be I don't know how to put this. It's gonna be a lot. Okay, I'll put it to you that way. It's gonna be a lot. And what we're gonna do is start with the daily time frame, which looks pretty bad. like especially this right here. Good gracious. Good gracious. But whatever. When we look at this move higher here, what can you tell me about that? What is in there, chat? When we made this move higher, I won't even don't even look at yesterday's candle. That's just garbage. But the focus should be down here. What is down there, chat? Right here. What is that? Gap and imbalance. Thank you, Torty. I appreciate that. Boom. Okay. When we have an imbalance, if there also is a gap there, we include that. Time frame doesn't matter. Okay. We always want to include a gap as part of that imbalance. Okay. So there's your first nugget for the day. I don't use props in my stream, but you know, we're here. So there's your first nugget for today. All right. When you have a gap as part of that, you include the gap. So the measurement goes from the from the close of Friday the 7th to the low of Tuesday the 11th. You guys get that? The close of Friday the 7th to the low of Tuesday the 11th. Thank you, Scott. I'm glad one of you appreciates that. So now we've also done a video on quadrants already, so I won't spend too much time on that. But basically what we're doing here, like if we take this off, okay, and I promise you we're getting ready to have the jaws hit the floor. All right. What we're doing here is we're taking a fib, okay, and we are drawing it from the close of Friday the 7th up to the low of Tuesday the 11th. See that? So when we zoom in on that, we've got a few different things here. We've got the upper quadrant, the halfway point, the lower quadrant, and of course, like the low end. Okay. You think that's funny, Ibrahim? You think that's funny? Nice. All right. I'm gonna go ahead and draw a line here. Okay. So the halfway point, you can see it right here, is 65037. You see that? 65037. You guys with me? Drop some twos in the chat if you guys are with me so far. We went to the daily time frame. We looked at this imbalance with the gap. We include the gap with the imbalance in our measurement, and we take a fib tool and we draw our quadrants. You see that? Elementary stuff. Now this is where, okay, this is where stuff gets very interesting, and this next few nuggets here are the reason why I told you to go grab a pen and paper. Otherwise, you're gonna miss out. When we go down to the smaller time frame, okay, watch this. Watch this. What's the low on that candle? Look up here. Look up there where it says L. Okay, look up there where it says L. Look at that number there. When I highlight the low of the 549 candle, 65037. Did you guys see that? Look at this. Look up here. I'm highlighting that candle right there. 65037. Wait a minute. Is that perfection, chat? Is that perfection that they say it doesn't exist? Oh shit. Perfection doesn't exist, John. It's bullshit. Okay. Sure it is. Yeah, Robert, right. There's not an algorithm. Supply and demand. Not even to the pip, to the pipette. Jesus. Lord have mercy. Okay. What else do you see here? Why do we even bother with quadrants to begin with? What was the secret that I gave you? It's not really a secret, but what's another nugget? Okay. Nugget, chat. You see this? We need another nugget for the people who don't know. What is the nugget when it comes to quadrants that I specifically took? We've been over this like twice already. What do we look for when it comes to quadrants? I'll give you guys a second to type that up into the chat. But we had a low, a high, and then a lower low that perfectly met the quadrant of 50%. Perfection, right? So what else is here? What else is here? Concept-wise, what's there? MJ said it shouldn't trade to the lower end if we're bullish. Okay, that's actually not what I was looking for, but I'm glad you brought it up. That's one of them. Sure. If we are bullish, we let's just give it a random color. We don't want to see this traded into all that much. We definitely want to have the lower quadrant left open. The bottom half of the bottom half should definitely be left open if we are super bullish, if there's any strength. Okay, chop. You are disappointing me greatly. What we look for... Thank you. Okay, you guys got saved. H came in at the last second. Okay. Right there at like the end of the macro, right? Right there, sliding into home base. Mitigation after manipulation. Thank you, H. Overlap with the quadrant, right? There's your mitigation right here. These are the up candles. This one's kind of not all that great, but the bodies, all of those bodies together, right? That range from 65, excuse me, 65098 to the body here, 65078. So that's like what, 2 pips, right? 7, 8, 9. Yeah, something like that. Okay, there's your 2 pips of range. And the quarter level, aka the upper quadrant, overlaps right there. So what is a reasonable expectation? What do you think is going to happen? I mean, you already know it trades higher, so there's only so much really that we can do here. Bang. We get into it a little bit lower. We trade beyond it, and then right here and right here. Okay, this was like 6 in the morning. Price is higher off of that. Drop some 3s in the chat if you guys are here so far. If you guys are with me so far. We saw perfection, right? Yes. Then we saw a mitigation that overlapped with the lower quadrant. How do I know what concept to use, John? This shit's too fucking easy, chat. It's too easy. But I'll go ahead and zoom out and show you the rest of it, so we have more time to do other stuff. But I'm going to leave that there. And then I'm going to take this off just so we can clean this up a little bit. if we zoom out, okay, let's go out to the 1 hour for a second. Oh yeah, I forgot to show you this too. Oh man, if this doesn't put a smile on your face, I don't know what will. Watch this. The Tuesday 11th low, right? That's where the imbalance is measured from. We have all these lows here, right? How far can price go below a low? Usually to the next available imbalance. Now, I told you this many years ago, and I did tell you that for the most part, I really only use this on ES, definitely not NQ. But ES, I told you what, we can go below a low or above a high in basically grades, 5, 10, 15, 20, 25. I wouldn't go above that, right? So just for, I've already done all this, but for sake of saving time, I'll show you this. There's the lowest low, and then minus 10 is right there. See that? We'll make it blue, right? So it's the lowest low minus 10, which is it's basically a measured sweep. This isn't new to you. It shouldn't be. Nails it. Okay? Nails it. Now that's not all. Okay? Because watch this. What else do we have here? We have those lows, right? This is the lowest one. And we have these two here. We sort of have this lack of wick right there. But then look right here. See that? Y'all see that? This here has upside price delivery, downside price delivery, right? Buy side delivery, sell side delivery, and then more buy side. All of this down here, okay, all of this down here has sell side or buy side, sell side, buy side, sell side, buy side, but it lacks sell side. You guys drop some fours if you guys are with me. We need high engagement today. Okay, if you thought this was Netflix, no. Well, I guess you don't have to, but you know, if you don't engage with the content, you're not going to learn it. But what I'm telling you is we have only buy side here, and we lack basically sell side price delivery between those two price points. You see that? 6503 to 6505 on this 15-minute time frame. You see that? So I'm going to take this off. I'm going to take this off. That right there is where we lack sell side price delivery. Look at that. Lower low, right into that imbalance, right to the halfway point, right to, I forgot half this shit. There's so many things going on here. The 50% level and that imbalance right there. You see that? So we have all of that down here. It's a lot to look at. You don't need it all. But just know, again, this is algorithmic price delivery. So there's all that stuff we just went over. And then your mitigation here that overlaps with the quadrant to go higher. Now the purple boxes, you guys should know this already, but the purple boxes represent an inversion. Now the inversion can be anything. You can have an inverted mitigation. You could have an inverted imbalance. You could have every concept has an inversion, and every concept can be cut in half. Okay. But when we zoom out a little bit, and let me take some of this stuff off here, because we are getting a little cluttered up as far as as far as all the markups go. But what is here? What is that starting to look like when you have that mitigation here? When you look at this here, what is that starting to look like? You have equal highs and you have a consolidation. See that? Consolidation, lower. We have another consolidation to go lower. So what is that? Distribution. We have another consolidation here. That up candle was utilized right there and right there to go lower. So what is this? Redistribution. Yes. Eric and Robert. Original consolidation. Distribution. Excuse me. Distribution. Redistribution. And once that mitigation has been respected, right, we can easily see that, oh, not with the magnet tool, but that lower low here is a soup. What makes that a soup? Remember, we have to zoom out for this, but remember I showed you all those lows over here and those lows here? The more obvious lows are that. Or this one right here. We will make it a different sort of color scheme here. Okay. So all three of these lows together, the lowest one, we're going to mark with that, with the pink line, but we're going to dash it so it looks a little bit different. Okay. So when we go down to this time frame, now you can see what that is. That's a lower low below the lows. So that's a turtle soup. So what's after manipulation? Low risk buy. First leg, accumulation. What's after that? Second leg. The law of the return, right? It's not a theory. It's not a guess. It's not a fucking reaction. It is a prediction. The law. Okay? Laws repeat. The law of the return states what? That what was once bearish, once it gets traded through, what does it become? Bullish. Expansion, retracement. What's after a retracement? Expansion. The expansion in our first leg of accumulation, look at those up candles. Okay, those are Corvette candles, hence the C7 hat, even though I don't drive a C7. I bought this hat on accident, and when I got it in, it was like, oh, this is a C7. I was like, fuck. But whatever, who cares? Okay, the Corvette candles regardless. Right there, Corvette candles printing, big up candles, no real retracements, right? It's fast, it's quick, it's dirty. And then right here, what do we also do? We cross 50%. So what does that tell you? That crossing of 50% is what? That's your neon sign. That's your flash. Remember we talked about that the other day? That's your signature. Hey, we're going for those highs, probably. So expansion fast, retracements slow, relatively slow, right? Followed by expansion, and then again retracement into the let's do this, okay? This stuff is hard to remember off the top of my head. This is redistribution turned accumulation. Okay, you see that? It was distribution, even a little bit here, but it became accumulation when on the buy side of the curve. Remember, manipulation, that's the lowest low. That always sets the low. That will never not be the case. Okay? So we have our sell side of the curve here. And we have our buy side of the curve here. Right? So when you see that, and again, it's always in order. Drop some fives in the chat if you guys get that. It's always in order. You can't have redistribution without distribution. You can't have distribution without original consolidation. It doesn't work like that. I can't turn 35 without first turning 34. I can't turn 34 without first turning 33. No shit. Right, because it's always in order. Time doesn't really go backwards. Okay? It only goes forward. The market maker models, it's the same thing. It will not go backwards. It will only go forwards. It will only do stuff in a row. Original consolidation, then distribution, then redistribution, then manipulation, then low risk buy, then first leg, then second leg. It will never not be that. That's why this stuff is predictable. Need not react. Predictable. Okay? Predictable. Predictable. All right? I'll say it one more. Predictable. Okay? Just so I can drill it into your head. So when you get this stuff and it's all in a row, yep, we got that. Yep, we got that. Yep, we got that. Yep, we got that. Okay, this should be that. And then this should be that. You see how easy that is? So by the time New York comes around, this is like right at the beginning of New York. New York basically starts and has just crossed 50%. So then what can we do? Let's go back to the basics for a minute. Power 3. Power 3. If our 7 o'clock open is right there, what can we anticipate? Buying below the open when bullish. Open, low, high, close. Remember those images? How many nuggets do you need today, chat? It's like a buffet, right? It's like a buffet. Remember that? Open, low to go higher, right? There it is. Open, lower to go higher. So when you're in expansion, if you're in expansion higher, that means don't short. That means do not short. You're shorting with equal highs, wrong. You're going to short in a buy program, wrong. No. Market is bullish, and it's giving you all the signatures in the world. Do you guys have any questions so far before we continue? Like, I know it's a lot of markups on here, but it's just for, excuse me, it's for illustration purposes. You guys have to see this is coded to do this stuff. There's no way this is a free market. This is absolutely not a free market. This is algorithmic. Okay? Look at this. I'm going to take everything off now because you've already seen all this stuff, and I really want you to focus on, I want you to hyper focus on this right here. On this right here. Okay? And then I'm also going to mark 7 a.m. Look at this. Again, this up candle, right? We took it, like swept liquidity here, traded lower, right? Shift into steady delivery, really like right here at the 310 5-minute close. But that up candle was traded in right here and right here to go lower. We get back into it, right? But look at what all the bodies are doing. We end up going lower, right? Again, really, really look at this. We've like lost a couple of viewers, which is fucking insane. I don't know why you would want to miss out on this, but that's beyond me. Look at that. Up candle stops. Yes, Fernando, they do. Why do you think it's called smart money concepts? This is how the algorithm is coded. So the ones who know can get in alignment with it. That's why. All right. So anyway, bodies here to go lower. So it hasn't traded through that yet. But it does trade through that here. You see that? It trades through it there. Then, even though the wicks are trading inside of it, where do all the bodies respect? They don't close outside the parameters of that reaccumulation. So that's telling you right there, all of these, those are telling you we're still bullish. And we are going to go for those highs. And we go right there, and like 1 or 2 pips, I guess, like 1 or 2 pips beyond that, and then we go back into the range, which is fine. But that's the expansion right there. And yeah, Cameron. But this is why I didn't even know we've already been here like 40 minutes. Oh, that's because I started late. That's right. Moving on. C8 logo right here, by the way, too. The old C8 buy. But we won't spend too much time on that. All right. But do you guys get this? Again, like, we're losing viewers, which again, I don't understand. So at least the ones that are still here, are you guys getting it? Are you guys getting it? Cameron, it's gonna do the same stuff, right? The fact that I don't think it's been probably at least a year, or maybe the first time ever I spent the first 40 minutes of the stream on currencies, on a single currency. It's only been AUD USD. But let's go over to, we'll do ES. We will do ES. You know, to be fair, I liked NQ more up here. I liked NQ more so. But whatever. Anyway, I left all the markups on here. I might have taken like 1 or 2 off, but I did leave this on here because remember last night, if you watch the market review, I told you what to look for. I told you, hey, I'm wondering if we come down for that low from Friday the 7th. And I left the question mark there because I told you we needed to get through Asia and we needed to get through London and then the pre-market. And then I wanted to see where we would be at equities open. That's what I told you in the market review. And I could be wrong, but I believe I said NQ, same thing. I said NQ, you know, I have the same idea. I'm wondering if we are going to take that low, you know, to then go higher. So what actually took place? Well, NQ did. NQ did. Swept the low. Look at all those wicks right there on this hourly. Right? Stabs into that like 3 times. Right? The 1, 2, 3 formation. Random. Right? ES did not do it. So that right there tells you what you need to know. Well, that's at least one thing. ES is under accumulation. Nasdaq is under manipulation. Now this, again, this is why, Cameron, I liked NQ more than ES. Excuse me. Not just because of the target, which now we can get into. On a 15 or a 5 minute, I liked how the, like, Asia high, I think that's Asia's high here. That this set of highs, right? The high on the right is slightly lower. I like that. And I like what we did here. The fact that we had consolidation, left it, traded into it, and then left it again. That's how we know this is going to be left open. It's going to be left open for now, but the market is coming back for that. So, you know, I'm sleeping, right? And overnight, right, London took us lower, and then the pre-market was janky, and our equities is what brought us lower and gave that 1 2 3 formation. One low, two lows, three lows, and those three lows again are below Friday the 7th low. So that it's not technically like the turtle soup, because it's not a low and then a lower low. It's three of them. But if you want to, you could look at it this way. A low, and then equities dropped us lower. So like that I could see being labeled as a turtle soup. Okay. So then we'll go to a 5 minute. All right. We'll look at the same thing. Original consolidation, distribution. Like this whole thing up here is distribution. And then I'd say like redistribution to go lower. Then we really don't get like a low risk buy on a 5 minute time frame. We really don't get any real retracements, which some people don't like, but I'll tell you, here's another nugget. You guys know this. Most of you know this. Bullish markets don't give deep retracements in the same way that if it's really, really heavy, if it's a really bearish market, it's not going to retrace higher very much. So like this retracement here, this one here, the first actual like down close candle is right here and another one right here, but that's after we crossed, right? There's 50% and we crossed that here. So that's the retracement that gets back into a discount right here. And then it sends for those highs. How far can price go above a set of highs, the next available imbalance, or like a new level of liquidity? And what is this over here? That is the gap from, that's our weekend gap here. See that? So more support and resistance ideas. more supply and demand ideas here. We traded right back into Sunday's gap. We left the upper half open a little bit, and now we're back into the range. But the point is, original consolidation, distribution, redistribution, manipulation, first leg, second leg. It just does it a little bit faster. This is very distorted. It's distorted in terms of time. Okay? It's not exactly like a time distortion, at least in the way that I could be wrong on that, but what I mean is, look how long it took for us to go lower, and look how long it took for us to go higher. Okay? There's your sell program here, right? And then from the manipulation up to those same highs, there's your buy side. There's your buy program. So that's what I mean by like it's distorted in terms of the amount of time. It took 17 hours and a little over 17 hours to create that sell program, to create the left side of the curve. And it took all of an hour and 15 minutes to go from the manipulation up to terminus. So 17 hours to go lower and just over an hour to go higher. That's what I mean by that. So yeah, during that's a heavily bullish market. It's fast, and it's not going to give you a chance to get in where you want. Well, I want a 50% retracement. Everybody tells me get the 618, the low up to the high, and I'm supposed to long the 618, and it never gives it to you. Right. Right. Because that's not how this works. It's not that easy. That's kindergarten. And a kindergartner level understanding of English can't write a book. Right? So what makes you think a kindergartner level of drawings is going to be able to get you like really, really good trades? It's just not going to happen. You need to go to first grade and then second grade and then all the way through elementary school, middle school, high school, and then maybe college. And then by then, okay, yeah, you probably have the skills to write like a novel or something. Right. And those are the things that I teach you. It's a storyline. This is all in order. This is your character story. This is your hero story, if you guys know what that is. Right? We have our hero on a mission, and then bad shit happens, and then he has to change and then overcome the dragons. Right. So, I don't know. I've been listening to a lot of Jordan Peterson recently. So, by the way, they put out the first like maps of meaning lecture on YouTube, I think yesterday. So, but yeah. Ed Moon, I don't even know what that means. I see Cameron's trying to be funny too. Yeah, Captain Hindsight reporting for duty. Yeah. I say that to be funny because I told you guys this in advance. NQ, I'll be honest, NQ, that was late. I don't know what time that was, but we were like in the middle of this expansion. I'm like, oh yeah, it's running for those highs. But I was not in front of the charts right at 8:30. I just wasn't. So, but that should have been clear by, bro. By 25K in here, you should know by then, yeah, it's going to go for those highs. So why would you partial above a high or above that high if you know it's going for those? I'm usually an advocate for that. I'm usually an advocate for taking partials. But if it's moving fast in your direction and you know it's going for some equal highs, why not just hold the whole shit? So, but outside of that, that's really about it, man. It's the same exact stuff, okay? It's the same exact stuff. It's everywhere. Sometimes we got to go down to a 1 minute to really see some stuff. But God, this 1 minute looks horrible. Okay, this looks much better. The 2 minute arguably looks way better than the 1 minute today. And this is exactly what I mean when I say that the time frames, some time frames can smooth it out more than others. That 1 minute looks like throw up, honestly. It looks bad. It looks like something that I would not take a screenshot of. Okay. This, however, it's showing you the same thing, right? Low, high, lower, low, but on this time frame, our 8 o'clock hour open here, we traded higher and we actually get some bodies here to go lower. And then we trade through those bodies at 840, and then 842, we trade down and into it. That's pretty solid. We trade lower. These two up candles get traded through here. There's your shift in the state of delivery. We come right back into those down candles here. Rallied. Imbalance there after I was gonna say fractal low, but I meant to say intermediate term low. See that? Low, lower low, higher low, boom. And then an imbalance right there. After that low didn't take Friday the 7th low, so it showed you accumulation here, and then showed you mitigation there, and then showed you all that. And then, just like NQ, I mean, you already know what's going to happen here, but just like NQ, ran for this consolidation and those highs. Not here, is a little bit delayed. Meaning NQ tagged its highs first, I think, and then NQ like followed suit. So NQ was like a little bit of a lagging scenario. And then we left equal highs at the high of the day. So I wouldn't short. That's what I'm saying. I wouldn't short this. 6,700. Oh yeah. What is up with you guys in this 6-7 shit, dude? You know what I mean? We haven't been to 420 in a minute. I don't think so. We're not even near the 6400s, at least for ES. But yeah. So you guys got a lot of nuggets today. So far, I mean, I'm pretty much done, but so far what we covered, we talked a lot more. I know, Mason. We talked a lot more about market maker models. We talked a lot about the order of models. Okay. You can't get the low risk buy without manipulation. You can't get manipulation without redistribution. You can't get redistribution without distribution. You can't get distribution without original consolidation. Okay. After manipulation is the low risk buy. After the low risk buy is the first leg accumulation. After that, or at least during that, the first leg should give us the cross of 50%. Then the second stage, the last leg, usually the fastest leg, is going to be after that on the way to terminus. Okay. So how do you know when to use the next candle entry model? Oh, you can use the next candle on anything, but how do I know when to use the mitigation model? When it's after manipulation. If it's part of the first leg of accumulation. If you're in a discount. If you're trading in the direction of opposing liquidity. How do we know when to use a shift and stay delivery? You can do that here, or you can do that in here as well. On a 1 minute. Or two, I think we went to the 2 minute, sorry. Right? How do I know when to hold trades? Hold for terminus. Right. The only thing we didn't do on this chart is we did not really look at distribution turning into reaccumulation, which we have a little bit of here. No, this part is definitely hindsight because I did not tell you. I did not tell you this in advance. I don't think I said anything about ES today. This level of distribution, right? These up candles here, because remember, original consolidation and then distribution to go lower, that level of distribution based on the bodies here, that turns into reaccumulation right there. Yeah, look at that. Look at that. I'll give you one more thing. I'll close with this. I'll close with this. And this is me talking shit. So I'll just give you that in advance. I'll give you that free of charge. All right. Here's the last thing. Here's the last thing. Okay. You can buy in a premium. You can buy in a premium. You absolutely can. You could definitely buy in a discount. I would never argue that. You can buy in the premium end. Okay. You can buy above 50%. If you longed anywhere in here, okay, anywhere in there, I'm not going to tell you to put your stop at the low end of this, okay? Why not? Because if you're trading, if you're actually trading FX, bro, and there's spread, you're going to get knocked out on that. Futures, not so much. But you have a short-term low here that got swept right there. See that? The stop could go there. It's a little, I would say that's a little bit too wide, but again, I'm just trying to give you some examples here. And then terminus right there, just at the high. If you add like 1 pip, okay, that's a 1 to 2.5. Not exactly a 1 to 3. A 1 to 2 is still okay. Now, why would I say that? Because I told you the other day, and I tell you this all the time. The probabilities are stacked because this is the last leg of accumulation. It's already given you everything else, right? Out of all the things to look for, 1, 2, 3, 4, 5, 6, okay? This is like the last thing. This is the first leg and then the second leg. That's the last move. That's the caboose. That is, to me, that is the most highest probability price leg there is. I didn't say the largest move. I didn't say the biggest move. The biggest move's from the manipulation. The second biggest move is going to be from the next candle or the low risk buy. I didn't say the biggest move. I didn't say this second leg it actually looks slower than the first one. The second leg is usually faster. The only thing I told you here is that the second one is the highest probability that we're going for those highs. So a 1 to 2 may not be the ideal RR, right? So guess what? It doesn't have the highest RR, but it does have probability. Let's put a check mark right there. Okay. So that may not be your favorite. That may not be your model. You may not like second leg. You can hold the second leg if you want. If you're in from any of the other models, right? That's fine. But the second leg, again, to me, has the highest probability. So a 1 to 2 is actually favorable. It's actually favorable. You're willing, if you're going to risk $100, you're going to make like 240 or 230. You know, if there's like spread and commission and whatever else, right? So that's still a little bit over a 1 to 2 RR when the probabilities are there. So that's acceptable. I didn't say it was prime. I didn't say it was perfect. I didn't say it was you're going to be a millionaire by next week. I didn't say any of those things. I just said it's acceptable. I would be willing to put risk on stuff like that. Okay? So there it is. There's your stream today. All right. Oh, Fernando, I didn't even see your question. Fernando said, what are the main entry models that SMS uses? And Cameron said, all the ones that I teach. So the main entry models, I don't know what everybody uses. I don't know. But this is why I give you a lot of them. I'm not a one-trick pony, okay? I'm not a guy who just does the low-risk buys and that's it. You can do really well doing that. Don't get me wrong. If you take low-risk buys and hold for equal highs and you average like a 1 to 4 or 1 to 3 RR, there's nothing wrong with that. Nothing wrong with that at all. The only thing is, if you limit yourself to that, if that occurs while you're sleeping and you don't enter later, you're not going to take that trade and you're going to miss out on gains. That's why I think having one model is retarded. And it is. You're going to limit yourself severely. But I've taught all of it. The turtle soup, I don't really teach you guys to enter on. I'd rather have you not do that. I'd rather have you take low risk buy or something in the first leg and at the latest second leg. But there's tons of ways to enter markets. Tons of ways. Okay. A lot of it is time-based as well. Buying below the open. Or if you're late, at least be aware, like, okay, we had our open, we already traded lower, and now we're seeking reaccumulation. So the market's not going to trade here. It's not going to trade here. It's definitely not going to trade down here. So instead, it's going to trade higher. That'll be the last thing I'll show you. That'll be the last thing. Equal highs are a high probability target. A lower low is a stop loss. A low here, right? That lower low, that's a stop loss. So we have stop loss placements and we have high probability target. So we should be looking for longs, not shorts. It's better to be on side than it is to get like a sniper entry, personally. Right, H. Turtle soup with higher time. Oh, that we did go over that too. Sorry, let me do one more. I'll do a brief overview real quick. I'll speedrun this real fast. All right. So what we did at the beginning, the very first thing we did was top down. And we talked about this imbalance here, but we include the gap. We include that gap, okay? So when we go down to the smaller time frames, we can see that the midpoint of that was our low of the day to the tick, or tick, not tick, pipette rather. Perfect, right? They say perfection doesn't exist. It's right fucking there. It's right there. Okay? You can't argue with that. You cannot argue with that. Then we talked about the mitigation overlaps with the higher quadrant. This should be 25. I just drew it backwards. But the upper quadrant is that mitigation overlaps with that. So because it overlaps with the quadrant, that's high probability. And then everything else we already talked about. Crossing 50% as the first leg, and then the second leg going higher for the equal highs up here as a market maker buy model. And that's what it takes, okay, for high probability trades. That's the way that I view it, okay? But what I'm not going to tell you is to trade every stage. You know, trade the distribution and then add on at the redistribution and then exit at manipulation and then take the low risk buy and then add on at first and add on later. I'm not telling you to do all that. I'm not telling you to be Spider-Man or to play ping pong. I'm not telling you to do that. What I'm telling you to do is look for high probability directional bias, high probability target, and get in sync with that at the right time and at the right price with the right context, and you're going to take good trades. That's my point. Spread can get you out of a trade because your broker can see that you're about to get stopped out because price is within a couple pips of your stop loss, so the broker can press a button, increase the spread, and then get you out. So you take a small loss and then the market goes your direction, and then you go, oh, this is bullshit. Well, it is bullshit. And that's, you know, that's brokers. That's what they do. And not all of them are like that, but the shady ones are. And that's why I prefer futures. It's part of the reason why I prefer futures, because there's virtually no spread. So with that, y'all be good, be blessed. I'm going to finish the rest of these. They're cold now, but I'm going to finish the rest of these nuggets, and then I'm going to have a good weekend. So I suggest you guys do the same. All right. I will see you on Monday for the next live session right here on YouTube.
One.